I think you're right. We are in a cautious mode. For us, what has been very interesting is that if you look at it from a top-down point of view, you would expect unemployment in the US to start rising, normalizing probably around 4.4-ish by the end of the year, if you look at the tightening that's been taking place for the last sort of 18 months and so on. However, if you zoom into the underlying data and you compare the weakness across sectors and compare it to previous recessions, we've never had a recession without either manufacturing or construction having a significant correction except 1973. And what we see from the data is that there is no sign of correction in those sectors. Hence, if the levels of employment remain resilient and the signs of inflation start to normalize with the year-on-year effects of energy going out, then we could see that the Fed may have a little bit more to do than what the market's pricing in.
Has something changed here? Will the recession be felt beyond the US shores? Because don't forget, there's been a huge stimulus package thrown at the United States to stimulate manufacturing in new areas. And of course, even under the Trump era in recent years, there have been certain policies and tariffs designed to stimulate manufacturing. So have conditions changed this time around?
I think you're right. There have been some differences in terms of the going back to America. Again, both the Trump and the Biden administration has been working quite constructively towards that, and that may be some sort of a supply shift. And I'm not sure we are committed yet in terms of the recession in the near term. We're not saying that because we want to see what the inflation data is showing next week, and therefore, is there any sign of consistency coming through on that? But broader, I think the broader uncertainty is not just around that, it's also about China, the continuing weakness in China. We've seen the weakness in Germany. Germany has been relying on cheap energy sources from Russia, exporting to China, and no defense costs. And so these three models have changed for the underlying community. So there are new levels of uncertainty, which we have to be aware of.
I don't understand many things, but one thing I don't understand is why the world isn't more worried about China, why US stock markets glibly ignore a lot of the warning signs, when you and I and Karen would have quite happily, well, quite sadly in some ways, over a decade ago, worried about an ATM not working in Cyprus, in Nicosia or somewhere. Whereas now we don't even worry about Beijing and China having 20% plus declines in property volumes and property levels as well. Why isn't the world more worried about China?
I think the world is worried about China from an economic point of view. We have seen some sort of an impact in sentiment there in terms of the emerging markets, which have been coming off over the last month. So I think there is some concern. And there's also some geopolitical concern, and that's why the US has recently sent 5 key signatories, key guys, to visit Beijing. However, I think the reason why we assume China will be fixed is the importance that the Chinese Communist Party ensures economic growth for social cohesion. So they need to ensure that takes place. They cannot have a similar to the GFC.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.